Hello, trading has closed on January 31st, 2024. We always start with our disclaimer. We'll go over our calls. We'll make some predictions. It's my trading plan for tomorrow, which is February 1st. Please remember my calls can be completely wrong. Trade at your own risk. Also, if you're up at 7 o'clock Eastern Time, Riley David will give you his analysis for free. You just have to go to that web address. Look for the pattern with the early high, which is this. Typically, it's a rally day with a high and a fine lower, but if it fails, it's a straight line drop, and that is as big a failure as you're ever going to see. And the rule is when you get the straight line drop, the drop's not over. Usually it'll go lower the next day, but even if you don't go lower the next day, it's coming. Any break, even one like this, needs confirmation. You have to go under today's close by at least 1 cent. So if we gap and promptly overtake the true high of today's move, 80 points higher, this gets invalidated. I'm going to go out on a very short limb and say that's not going to happen. We had a target 49.1838 that printed. We had a failed target from Monday's pattern 48.9513, and that printed today. As I said yesterday, these things don't always print when you want them to, but they do print. The timing of the high was right at one of Christopher Carolan's dates, which he calls well in advance. Again, these don't all have to work, but if you're going to get a major change in trend, it tends to be within 3 days of one of these dates. I think the decline is credible based on that standard. It also, wrong chart. It also came right at the extreme price predicted by Tom Tamark from this pattern, which completed in the summer of 2021. Kind of an amazing thing. The pattern that old would call the top, but it did. Well, during the day, MEJT said ultimately lower prices would print, but optionally we had a higher target. We certainly got the lower prices. Optional target was to go over this, and we got that too. All these moves were called false, and they've already retraced. Here's your stilt, left stilt, right stilt. Here's the diamond. The first challenge of the origin of the left stilt usually holds because it's support. But if you break through it, that price becomes resistance. So we had an impulse down, a pullback to resistance, another impulse down. This has the look of a downdraft that's just beginning. That one we've shown. Here's how the pattern looks on the daily chart. This drop here is where we call the end of the bear market, the end of the correction. It wasn't the bear market because futures were already up, but it was the end of wave the genus C. This is a strong impulse. We now have what I'm calling a cup with an upsloping handle. And when you have a cup, the handle is sloping up. It's an unstable pattern. Once you break this, again, you need confirmation going under today's close. Once you break this, the target's to go to the low of the cup. So here's your cup. Here's your handle sloping up. Here's your break. You get confirmation. You go to here, which is the fifth target of the right stilt. So we're looking for 47.1482. Doesn't mean we go there tomorrow. It also is a target. It's not a stop and reverse. Now it's possible to count this as 5 waves up. And if it is 5 waves up, that's the end of wave 1. And then we should have started wave 2. If that's wave 2, should be a corrective wave. This looks like an impulse. And the way to have an impulse is if it's wave A of an ABC. And I don't see that wave as being over. So if that's true, and we are in wave 2, and that's an incomplete A of an ABC, if that's the right count, we should have quite a bit lower to go. Pattern tomorrow has the early low. Thursday's pattern has the early low regardless of where we open. The first move after the FOMC announcement was up, and usually that means in the long run we're going higher. That doesn't preclude having a considerable decline first. Today's normally bullish pattern was a bearish pattern, should lead to lower prices printing tomorrow regardless of how we close. The futures are up, so you never know. That's what usually happens. Any break, even one this strong, needs confirmation by trading under today's close. Now, futures are up as I write this. I'd be quite surprised if this decline were over, even if we don't get the typical lower prices Thursday. The decline came at a time and price compatible with a significant high, as we've been pointing out. A recovery attempt stopped the resistance from the origin of the left stilt of my diamond on stilts pattern. I'm assuming we're in wave A of wave 2 and that we have quite a ways further to go before this decline ends. So I wouldn't fight this now. I mean, you're not going to go in a straight line like this all the time. This was quite a recovery. But to me, it looks like we've completed wave black 1 up from last October's low. I think we're in wave 2. I think we're going at least into the low 4700s, but I can't calculate that's the minimum extent of this drop. I can't calculate the maximum. Just don't forget, we have a lot of targets that we left behind, and wave 2 often is going to correct a significant portion, but not all of wave 1. So if this is as strong as it looks, and it keeps it up, we have quite a ways to go on the downside. Tomorrow has a really low, and that's today's call.